2, 1. Hello and welcome back. This is Roger Royce with the 10,000 Startups podcast. And this week we are talking with Jason Fishman. He's the co-founder and CEO of the digital and niche agency. As you know, 10,000 Startups podcast, each, hopefully every week, but usually every month, we will bring you original content on issues of interest to startups, typically legal issues. This week, we're going to take a little bit of I guess maybe something that's legal adjacent,
Yes.
and talk more about some of the other issues around a securities offering called crowdfunding that we have talked at length about here on this podcast. This week, however, we're going to talk about why these Regulation CF crowdfunding campaigns, their ads anyway, they fail before launch, and maybe give you some tips on how to make this successful. So, Jason is, like I say, the co-founder and CEO of Digital Niche Agency. He's a new media enthusiast. He has over 15 years of experience mastering performance-driven digital marketing from paid media, content, social to programmatic, email automation, partnerships, and influencer campaigns. So, Jason, I want to thank you for being here, and this is going to be really interesting content to our audience. So, first of all, can you maybe just so we can level set, just kind of tell people at a high level, what is a Reg CF offering, and why do we need ads?
Sure. Happy to break it down for you, Roger. By the way, it's a pleasure to be on. Been looking forward to the conversation. Love what you do. Reg CF stands for Regulation Crowdfunding. It went into effect in May 2016. It was actually signed at the White House in 2012. It took that long for the SEC and FINRA to figure out the right regulations. And today, on a Reg CF campaign, you could raise up to $5 million from virtually any adult. There's another filing called Reg D 506C that allows for solicitation of accredited investors. So only high net worth and high household income audiences could get into the exact numbers there. But Reg CF democratizes access to capital for founders, for CEOs. They're no longer limited by their first degree networks or their friends, second degree networks. They can advertise, they can market, they can be featured by publishers and have investors actually participate in their rounds. On the other side of the table, and why I love this exemption, this vehicle so much, it gives investors early access to deals. Private companies, they can invest in private companies. If there's unicorns that come out of that, they could share in that upside. And advertising is how you get traffic there. So I could hop into the stats, how many of these campaigns actually raise 5 million, raise a million, the traffic differentiators, but just from the high level view, I guess I should throw one more term at you. That's Regulation A plus. That is the big league of this. You could raise up to 75 million. Very in-depth filing. A lot of lawyers, a lot of accountants working heavy hours to get those completed. 80% of the work to go public, to do an IPO, from my understanding on the marketing seat of the table. Some companies even use this to direct list, and public companies can use it to do a priced round. So it's one of those three types of structures we're typically working on.
Okay, so what's huge about this, in my practice anyway, is that unlike the accredited only offerings that I'm used to doing, we can have unaccrediteds in this, and they can invest small amounts of money. And if somebody comes in my office and they say, I want to have like a lot of investors, accredited or not, and they're going to put, $2,000 in each or five, whatever it is, I'll say, you just cannot economically do that. We cannot do that under a typical, what we call 506 offering. And now we've got CF, which is a platform where they can economically do it. So if you got a company that's got a product, especially like a consumer product that people can understand, like a wristwatch maybe,
Yeah.
or something like that, or a special kind of battery. I mean, I'm thinking of successful campaigns I've seen. Then you can go out into the market, and the public, people you've never met, through these platforms can actually throw a little bit of money into your company because they just really love the product. So for the right kind of company, it just opens up all this capital that they never would have had. So I'm a big believer in CF offerings. So let me ask you, and we have other podcasts where we dive deep into kind of like the details and like
Sure.
all the mechanics. But for now, we're going to kind of focus on, assuming, you decided you're going to do this, how do we make it successful? And my this podcast is based on my book 10,000 Startups, which is about success. However, my first book was called Dead on Arrival, which is about failures. So I'm going to start there. You've done over 500 investor acquisition campaigns. What's
Yeah.
the most common mistake founders make before they even spend a dollar on ads?
They think by simply taking their campaign live, which is an undertaking to go through the Form C, depending on how much they're looking to raise, reviews, financial audits. Once they're live, they think, hey, this is on the internet. There's billions of people on the internet on a daily basis. Perhaps they're listing on a portal, a marketplace for these deals, a FINRA-regulated portal. And they assume the crowd is just going to love what they do and line up in droves to invest. Simply not the case. Last year, there were 1,006 Reg CF campaigns. Only 10% hit $1 million or more. Only nine, less than 1%, raised the full 5 million. Happy to say we worked with several of those and many of the $1 million plus campaigns. The more telling number of equity deals, the median raise was about 194K, including debt. And historically, I would tell you it's closer to $115,000, meaning half of the issuers are unprepared. They're not getting enough people to their deal. That's the biggest differentiator I see, by the way. They don't have enough engaging content to see those investors close, and they get stuck. 100K below, around there. So you see the top 10%, the bottom 50%. I would tell you it's not that much different from my research and experience from what I see offline and approaching VCs, approaching angel investors. I've seen stats along the lines of 4% of deals get funded at that level. So it's not to say, hey, that this stuff doesn't work. But I would tell you to make one of these campaigns successful, high level view, you need enough traffic at a high enough conversion rate. What does enough traffic look like? Some of those numbers you were throwing out are actually pretty close to the average investment. Last year was $1,716 was the average investment on a Reg CF deal. The year before was $1,500. The year before was $1,190. I would say you want to project conservatively $1,000, $1,500, somewhere in there as the average investment. It'll likely be between $1,000 and $2,000, but rather be pleasantly surprised from higher average investment amounts than shocked if I'm getting a lot of investors and it's not amounting to where I want. Why am I breaking down these numbers? If I'm looking at $1,500 as an average investment, and then I start taking into account average digital performance benchmarks and metrics, I realize, hey, I may only get a 1% to 2% conversion rate from audiences that hit that offering page. This is a digital exercise. I need to measure, the appropriate analytics. 50,000, 100,000 visits to that offering page may only bring in 1,000 investments, which at that average investment amount may only be 1.5 million, maybe between a million and 2 million. I may need 3,000 plus investments to hit that full $5 million. So, I am going to need to account for that and bring 150,000, 300,000 visits to that offering page. Also, and back to the nature of your question, most issuers don't bring enough capital in the early stage of their round. It's very difficult to convince a cold investor, someone who does not know you, your partners, your product, your team, that you're going to disrupt the watch industry. And by the way, it's a full spectrum of different verticals at this point. We're working with 3D printed home companies. We're working with mom and pop restaurants and bars and tunnel boring companies and AI. And you hear about it, as a company that's raising, they're probably using this vehicle. But it's very difficult to say you're going to compete in any one of those industries if you have $20,000 raised. $60,000 raised is still tough. Where the same deal, the same prospective investor with $160,000 raised and showcased on the page, or $560,000 or $1,060,000, it's a completely different scenario. So even if it's $1,000 on average from 100 people that which Some of them are putting in a minimum, maybe 100, $500, depending on what you set in your filing. Others are putting in 5, 10, 25K. They want some more chips on the table. They may only be doing that to support you or to have a connectedness to what you're doing, to be along for the ride. It's different asking anybody for, $1,000, $1,500 than it is to ask them for $150,000 or $1,050,000. So the economies of scale really play a large factor here. All the investors sit on one seat of the cap table. You're setting your terms, your valuation. And as a marketer, have to say, you bring on 1,000 investors to raise your goal, it's much more powerful than bringing on one. You get an announcement out, it's shared right and left. You may have, publisher opportunities come out of that, strategic partner, client, merger and acquisition, franchise, what have you. There's a lot of different types of people in that investor pool that come out, but you have to have enough traffic and enough headline worthy announcements on a weekly basis to be able to convert them at a high enough level.
Gotcha. Now, I've seen a lot of agencies that do this. They treat a capital raise just like a product launch, just one big push. And
Sure.
I've heard you say before that's just the wrong frame entirely for something like this. So, what is the right frame?
So you're saying one push, it reminds me of reward crowdfunding, Kickstarter, Indiegogo campaigns, where it may be 9 months of pre-launch. So you're building up a large enough audience so that day one, you could do that large push, have a strong enough foundation so you're able to point to it, social proof, get featured, get more of an audience converting, and it's a sprint. You're looking to do it typically in 30 days. There are actually a lot of similarities with investment crowdfunding, but the campaigns are, 3 months to 12 months. So you have to keep building and building and building on top of that because it's a higher average conversion amount too, where reward crowdfunding it may be $100. If we're talking $1,000 to $2,000, more of a decision-making process. Not the same as 100K conversion, which you'll likely get some of those in one of these successful rounds. But it's more of a marathon versus a sprint. You have to have a strong start to the marathon. You have to make sure you have enough momentum all the way through. Otherwise, you're never going to finish. And then the end, that's where the winners and losers are set in that race. Trying to make the right analogy here, but that is where you're going to see fear of missing out from investors. You're going to see a big spike. The closing messaging really creates more momentum there. But it's probably the seventh time, maybe the 17th time, maybe later. That they're getting back to your offering page that they actually invest. So different than a product launch where it may be a $30, $100 conversion, and someone does an impulse buy. This is more of an investor prospect journey.
So it requires a little bit of front-loaded research, it sounds like, which means these founders sort of have to slow down on this, I guess, is what you're saying. And that must be a hard thing to convince people to do, right?
It's hard to convince people just to plan and do
Yeah.
strategy before their raise is up and running. Sometimes we'll have conversations before, and then we won't hear from them until their campaign's live and plateaued. So, yes, to be able to speak to them about strategy, pre launch, test marketing budget, seeing results, optimizing, scaling up from there, it could be different than what they envisioned in many cases.
So what separates a campaign that stalls from one that scales? I mean, what's the big difference? How do you get that, for example, that investment size? Maybe you can't do much about that, but you could maybe increase the number of investors.
Well, you have to be very intentional in these campaigns. You have to plan, build a strategy, and have the power to be able to manage the moving parts. You can get lucky outside of that. It could be the perfect storm of you list the deal and someone unexpected sees it and they talk about it online and there's a grassroots social sharing occurrence and you could go viral. Statistically, it's not going to happen. You want to be able to identify what your traffic sources are going to be, how you're going to be getting the right investors there. These could be your customers, your clients, people who follow the industry. These can be investors who participate in these deals regularly. I've got a database of over 1.8 million historical equity crowdfunding investors. Some of those individuals have over 100 deals in their portfolio. It's all a matter of who you're targeting. But you got to figure out how you're going to A/B test these audiences so you could compare and contrast the results and see, which ones are working best. I find advertising to be very scalable because I know roughly every dollar, $2 I spend is a visit to that offering page. And if I'm getting the conversion rates that we talked about, maybe every $100 to $200 is a cost per acquisition, a new investment, a new conversion takes place. If that's $1,000 to $2,000 average investment, I may be at 5x, 10x, even 20x return on advertising spend. There are different approaches towards measuring that with pixel data and Google's UTMs and tracking mechanisms. So there's differences of opinion there. At the end of the day, you want to look at marketing efficiency ratio, how much is spent and how much is being raised. But if
Yeah.
you're at a 10x, even if you're at a 3x marketing efficiency ratio, you should be somewhat aggressive with the timeline once it's converting to be able to buy more of that traffic. Whether you're doing it from advertising, whether you're doing it from outreach, you're really going to need to ramp up the outreach for that to occur. Whether you're earning media, you want to reach out to more publishers, more podcasters, more conferences, more people who are talking about you. And, if it's to your audience, perhaps more messages, more live events, more webinars to engage them further and get a larger percentage of them to convert. Sometimes work with groups that have hundreds of thousands of people in their email list, millions of people in their social audiences. So you could do more to get a higher percentage of them to convert. But the time
Yeah.
clock's the most important element here. You're going to need to ramp it up quickly. If I look at the difference from one founder who's highly successful to the next in one of these rounds, that is the distinguishing factor.
Ramping it up. So I got to ask, what about influencers? Is that a real thing or is that just kind of overhyped?
Oh yeah, absolutely. It's a broad term, and I've worked with many types of influencers. Nano influencers under 10,000, micro influencers over 100,000, under 100,000 followers, under a million, under 10 million, and the response rates and engagement rates, everything that you look at could vary from each of those categories and how engaged, how real their actual audience is. I would tell you, I basically look at it as an advertising partner, and I still want to measure the same metrics. How much traffic is actually coming through from their impressions? So the visibility they get from their posts, their email, their video, their in-person recommendation, how much traffic is it driving to the offering page or landing page, sign up form in between? How is that traffic then converting? What is the conversion rate of that traffic? Because sometimes we, have these shiny objects, of, a million followers, and then you see the post produced 200 visits, 200 to $400 media value, perhaps. I should say traffic value. Media value would calculate a bit differently. Then you could figure out how to use the influencers. The first Regulation A Plus campaign I worked on, a company called Rayton Solar, featured Bill Nye the Science Guy talking about their energy, their solar technology. He was featured in the offering pitch video. Then had given rights to be able to use in advertisements and to post a couple times on his 2 or 3 times on his social media pages. Uh, Shareholder believed in what they're doing. This is more than just a rate card and hey, I'm signed up to post on your behalf. For the posts, we'd see a bump. 24 hours, maybe 48 hours, we'd see a flood of investments come through. Maybe a few dozen.
I
Uh,
see. Now, most
during
of these
the placement of
campaigns,
the ads, we could use it all year.
yeah, sorry to interrupt, but most of these
No,
campaigns that you're talking about are they mostly Reg A or Reg D or Reg CF or just across all of them?
mostly Reg CF. There was 41 Regulation A plus deals last year. We worked
Yeah.
with a good percentage of them, but there's only so many. That's outside of fractional deals and some real estate deals. Some of the fractionals are, collectibles, you own a share of that. But Reg CF is what keeps us busy. We do more and more Reg Ds. You could do a side-by-side Reg CFD and Reg CF, Reg D, and take the credit investors and retail investors to different funnels.
Okay. Well, so the last thing I'll ask you is let's suppose that there's a founder listening to this who's got a live offering right now, and they'd like to maybe increase the raise or get to their target a little more quickly. what's the one thing they could do that they're probably not doing that would help them out?
I would build a content calendar with different people that you know with the largest, most engaged audiences. And I would set that up for 60 to 90 days and challenge yourself to get 60 to 90 people to post about you and to comment on the other people's posts. This could be difficult. You may need to support in the content creation aspect of it. They can literally just, take a 30-second selfie video talking about why they invested or why they like your company and post it to their audience. You could do a shared post and get it out to your audience. Hopefully you're getting new traffic to the page that way. Also, your content funnels will seem, overwhelming with people talking about you. I mentioned comment too. If they're commenting on each other's posts, it goes into the social media algorithms and gets you a lot more traffic, especially on LinkedIn. I would then take the top performing posts and run them as advertisements. And you could have them, share their audience. You could use a different audience, be very specific on where these ads go. But you could type in equity crowdfunding. There's a million people in that audience. But it's all a matter of engaging content, third party validation, and traffic to your offering page. So the combination of those, if you have no ad budget, just the post, if you're adding ads to it, they should perform stronger. I would do right now.
Good. Last question, Jason. How do people get a hold of you if they want to hear more about this?
Come out to Marina Del Rey. No, I said find me on LinkedIn, Jason Fishman, Marina Del Rey. Don't be hesitant. I'm very approachable. You could also go to our website, digitalnicheagency.com, and find us on youtube.com/ at Digital Niche Agency. That is DNA, by the way, but at Digital Niche Agency, and you'll see my podcast, Test Optimize Scale. You'll see our monthly educational series. So no shortage of content.
Okay, great. Well, I want to thank you for being here. This is Roger Royce with 10,000 Startups. We've been talking with Jason Fishman of the Digital Niche Agency about Reg CF, Reg D, Reg A, and marketing your crowdfunding campaigns. So I want to thank you for being here, Jason. I want to thank you, the audience, for listening, and we will see you all next week.
Thanks, everyone.